127 million ounces, gone. Not destroyed, not lost, consumed by industries most investors aren't even watching. And here's the part that should make you pause as silver today is trading around 79 per ounce. After hitting an all-time high near 121 per ounce in January 2026, it dropped hard. And right now, most people think the move is over, but it's not. Because what you're seeing is not the end of a cycle. It's the setup for the next one. Let me explain. Because if you're only watching price, you're already behind. Right now, silver looks boring, flat, uncertain, even weak. And that's exactly why most investors are ignoring it. But here's the reality. The biggest moves in markets don't start when things look exciting. They start when things look quiet. Welcome back to John Forecast, where we decode the macro forces behind the gold, silver, and global market moves. And this is where it gets interesting, because silver isn't just sitting at 70 to 80 randomly. This price is sitting on top of one of the most aggressive moves in decades. Let's rewind. Just a year ago, silver was trading around 30-35 per ounce. That's it. Nothing dramatic, nothing headline worthy. Then something changed. Demand surged, flows increased, momentum built, and silver exploded higher, rising more than 140% year over year at one point, topping out near 121, and then the correction came, a brutal one, back down to the 60s. Now here's the mistake 95% of people make. They look at that chart and they think, bubble popped, move is over, too late. But that's not what this is. This is a reset inside a much bigger structure, because in every major commodity cycle, the same pattern repeats. Phase 1E, nobody cares. Phase 20, smart money enters quietly. Phase 3D, price explodes. Phase 4A, correction shakes everyone out. Phase 5E, the real move begins. And right now, we are sitting right here between Phase 4 and Phase 5. But here's the question nobody is asking: why did silver even move in the first place? Because without that answer, you can't understand what happens next. So let's break it down fast. No fluff, no long explanation, just what matters. Silver is not just a precious metal, it's an industrious everything. Gold mostly sits in vaults. Silver gets used. Consumed. Got on that demand, it's exploding. Solar panels, electric vehicles, electronics, AI infrastructure. Every solar panel built today uses silver, and solar demand alone is taking a massive share of global supply. Now think about this. This isn't optional demand. It's policy driven. Governments are pushing it. Companies are investing in it. Infrastructure is being built around it, which means something very simple. This demand is not going away. Now layer something even bigger on top: supply. Because while demand is rising, supply isn't keeping up. Global silver production has been relatively flat. In some years, it's even declined. And that creates a problem. Because when demand rises and supply doesn't, the gap doesn't disappear. It builds. And that's exactly what's happening right now. A structural imbalance. But here's where it gets even more interesting. Because this imbalance doesn't show up immediately in price. Instead, it builds pressure. Quietly, slowly, almost invisibly. Until one day it doesn't. And that's when the move happens. Fast. Aggressive, violent. Now let's bring this back to today, because this is where everything connects. Silver today is not at 120, it's at 65 to 75. That means one thing: the hype is gone, the attention is gone, the emotion is gone, and that's exactly when smart money starts paying attention, because they're not chasing headlines, they're positioning before them. Now here's a number you need to understand, because almost nobody is talking about it clearly. Major institutions like JP Morgan are forecasting silver to average around 81 per ounce in 2026. That's not hype. That's their base case. Now think about what that implies. If silver is sitting around 65 or 75 or and institutions expect higher averages, that means something is building. But that's just the surface, because the real story is deeper. Let's talk about the gold to silver ratio. Right now, it takes roughly 60-70 ounces of silver to buy 1 ounce of gold. Historically, that number is lower. And every time this ratio compresses, silver outperforms aggressively. We've seen this before. 2008, 2009, 2010, each time silver lagged first, then exploded. And here's the key point: that explosion didn't happen when things were obvious, it happened when things looked uncertain, just like now. But here's where it gets even more important, because this isn't just about history, it's about what's happening right now. Global macro conditions are shifting. Interest rates are uncertain. Inflation is still a concern. Growth is slowing in some areas, and when that happens, capital starts moving, not all at once, not loudly, quietly. And where does it go? Assets with real demand. Limited supply, macro tailwinds, silver checks all three. Now pause for a second, because this is where most people miss the entire picture. They wait for confirmation, they wait for headlines, they wait for certainty. But markets don't reward certainty, they reward positioning. By the time you see silver is surging, silver breakout confirmed, silver hits new highs. The move is already happening, and that's the trap, because the opportunity exists before the narrative. Now let me show you something most people never think about. Volatility. Silver is volatile, much more than gold, and most people see that as a risk. But smart investors see it differently. Volatility is what creates opportunity because it shakes people out, creates fear, creates doubt, creates hesitation, and that hesitation is what keeps people on the sidelines. Right now, silver is not giving you certainty, it's giving you confusion. And that confusion is the setup, because every major move starts like this, not with excitement, but with doubt. Now here's the question you need to ask yourself. Are you looking at silver as a price chart or as a setup? Because those are two completely different perspectives. One reacts, the other anticipates. And right now, the setup is happening. Not next year, not later, right now. But here's the part most people still don't understand. This isn't even the full story. Because what's happening in supply, demand, and price is only one layer. There's another layer, a deeper one. Institutional behavior, positioning, flow of capital. And once you see that, the entire picture becomes clearer. Because this is not just a silver story, it's a market structure shift. Because if you think this is just another commodity cycle, and this is where things stop looking like a normal market and start looking like a setup. Because what we covered in the first part, that was just the surface. Price, structure, cycles. But underneath all of that, there's something much bigger building, and it's happening quietly. Let's start with demand. Because this is where the story becomes undeniable. Right now, global silver demand is pushing toward 1.2 billion ounces annually. That's not a small number. That's massive. Now compare that to supply. Global mine production, roughly 800 to 850 million ounces per year. Even if you include recycling, the total supply still struggles to keep up. That leaves a gap, a deficit, and not just a small one. We're talking about 100 to 200 million ounces short every single year. Now pause and think about that. Because this is not a stock market, this is a physical commodity. If demand exceeds supply, there is only one long-term solution: price. But here's the part most people miss. This doesn't happen instantly. The market doesn't immediately jump and say, hey, we're short 150 million ounces, let's reprice. No, it builds pressure first. Quietly, slowly, until something triggers the move. And right now that pressure is building again. Now let's break down where this demand is actually coming from, because this is where the story becomes powerful. First, solar. Solar energy is no longer a niche sector. It's a global priority. Countries are investing billions. Companies are scaling production. Infrastructure is expanding. And every solar panel needs silver. Not optional. Not replaceable at scale. Silver is the conductor that makes photovoltaic cells work efficiently. Now here's the key detail. Solar demand alone is consuming a massive portion of global silver supply. In recent data, it's estimated that over 20-25% of annual silver demand comes from solar, one industry, taking a quarter of global supply. And it's growing. Now layer in electric vehicles. EVs require more silver than traditional vehicles. Why? Because of electrical systems, high voltage connections, sensors, control units, and EV adoption is accelerating. Now add something even bigger. Infrastructure, data centers, servers, advanced chips. All of these rely on high performance electrical systems, and those systems use silver. So now you have three massive demand engines: renewable energy, electric vehicles, artificial intelligence infrastructure, all pulling from the same resource. At the same time, now here's the problem. Supply is not keeping up. Mining is slow, expensive, and increasingly difficult. New silver mines take years to develop, sometimes decades, and most silver is not even mined directly. It's produced as a byproduct of other metals like copper, lead, and zinc, which means silver supply is indirectly tied to other markets. So even if silver demand surges, production doesn't automatically increase. This is what creates structural constraints. Now let's bring an institutional perspective, because this is where things shift from interesting to serious. Big institutions don't chase hype. They track flows, positioning, macro signals. And right now, their behavior is telling a story. Silver ETFs have seen cycles of inflows and outflows, but overall interest has not disappeared. In fact, during uncertainty, silver often attracts capital because it sits in a unique position. It's both a hedge like gold and an industrial metals like copper, which means it benefits from multiple narratives. Now here's something even more important. The correction we saw from around 121 down to the 60s, that was not just random. It was driven in part by margin pressure, leverage unwinding, profit taking. In other words, a technical correction, not a fundamental breakdown. And that distinction matters a lot. Because when fundamentals break, the story changes. But when technical factors drive the move, the underlying structure stays intact. And right now, that structure is still there. Demand is still rising. Supply is still constrained. Macro conditions are still supportive. Nothing fundamental has disappeared. Now let's talk about macro, because this is where things connect to the bigger picture. Interest rates, inflation, economic growth, all of these influence silver. If inflation remains elevated, silver acts as a hedge. If growth slows, central banks may ease policy. Lower rates support metals. If the dollar weakens, silver tends to rise. So in multiple scenarios, silver has tailwinds. Not guarantees, but tailwinds. Now here's where the setup becomes clearer. Silver is not at highs, it's not trending aggressively, it's not dominating headlines, and that's exactly what you see before major moves. Because attention comes later. First comes positioning. Now think about how markets actually move. They don't move when everyone agrees, they move when positioning shifts. And positioning shifts quietly. Before headlines, before retail participation, before hype. That's the phase we're in right now. Now here's a question most people never ask. If the fundamentals are strong, why hasn't silver already moved higher? And the answer is simple. Because markets are not purely logical. They're emotional, they're cyclical, they're driven by behavior, and behavior creates delays. Investors hesitate, they wait, they doubt, and that delay is what creates opportunity. Now let's talk about volatility again, because this is critical. Silver is known for sharp moves up and down, and that volatility scares people. But it also creates the exact conditions needed for big moves, because volatility removes weak hands, resets, positioning creates emotional reactions, and after that reset, the market is ready for the next phase. Now step back and look at everything together. Price has corrected from highs of demand, continues to rise, supply remains constrained, the institutional interest persists, macro conditions are supportive. That combination is not random, that's a setup. And setups don't last forever, because eventually something triggers the move. It could be a shift in policy, a surge in demand, a supply shock, a narrative change. But when it happens, the move is fast. And here's the key point. By the time the trigger is obvious, the move is already underway. Which brings us to the most important part of this entire video. Why most people will still miss it. Because understanding the setup is not enough. Most people are not looking for opportunity, they're looking for certainty. And those two things rarely exist at the same time. Think about how investors behave. When silver was sitting at 30 over, nobody cared. When it crossed $50, some people noticed. When it surged toward 100, everyone started paying attention. And when it hit 121, that's when the majority believed. But here's the problem. By the time belief shows up, the opportunity is already behind you. Because markets don't reward belief, they reward positioning. And positioning happens earlier. When things feel unclear, when things feel uncertain, when things don't make sense yet. That's where we are right now. Silver doesn't feel obvious. It doesn't feel urgent. It doesn't feel like something that's about to move. And that's exactly why most people are ignoring it. But here's what experienced investors understand. The best opportunities don't feel like opportunities at the beginning. They feel like doubt, confusion, indecision, and that discomfort is what filters out the majority. Now let's go one level deeper, because this is where the real difference is. Institutional investors and retail investors do not operate the same way. Retail investors react, institutions anticipate, retail waits for headlines. Institutions watch flows, retail looks at price, institutions look at structure, and that difference is everything. Because by the time retail investors enter, institutions are already positioned. And this isn't theory. It's how markets have always worked. Look at any major move. Stocks, commodities, crypto. The pattern is the same. Early phase, quiet accumulation, no attention. Middle phase, gradual move. Skepticism. Late phase, rapid surge, mass attention. And then distribution, volatility. Correction. Most people enter right before the correction. Markets are manipulated. This doesn't make sense. I missed it. But they didn't miss it. They just entered at the wrong phase. Now bring this back to silver. Where are we? We are not in the hype phase. We are not in the panic phase. We are in the setup phase, the quiet phase. The phase where data is strong, structure is building, but attention is low, and historically, this is where the biggest opportunities exist. But also where the least people act. Now here's another layer most people don't think about. Narratives. Because markets don't just move on numbers, they move on stories. Right now, the dominant stories are AI stocks, interest rates, economic slowdown, geopolitics. That's where attention is. And attention drives capital. But here's what always happens. Narratives shift, slowly at first, then suddenly, and when they shift, capital follows. We've seen this before. Energy, ignored then dominant. Gold, quiet, then explosive. Crypto, unknown, then everywhere. And silver, right now, it's still in the ignored phase, but not for long, because once the narrative changes, the move accelerates. And here's the key insight. The price move happens before the narrative shift, not after. Which means, if you're waiting for headlines, you're already late. Now let's talk about risk, because this matters. Silver is volatile. It doesn't move in a straight line. It can drop. It can consolidate. It can test patience, and that's exactly what it does before major moves. Because volatility has a purpose. It removes weak hands, forces emotional decisions, creates doubt. And that doubt is what keeps most people out. Now here's the mindset shift. Average investors try to predict exact bottoms, exact tops, exact timing. Smart investors focus on positioning, structure, probability. They don't need to be perfect. They need to be early enough and disciplined enough to stay in. Now step back one more time. Look at everything together. Silver, A ran from U$30 to U121, corrected back to U65 to 75, still supported by rising demand, still constrained by limited supply, still aligned with macro tailwinds, and yet most people think it's over. That's the opportunity, because markets don't reward consensus, they reward perception, and right now, perception is wrong. Now here's the final piece. Repricing events do not announce themselves, they don't send alerts, they don't wait for confirmation, they don't make it easy. They happen quietly, then suddenly, and by the time they're obvious, they're already in motion. That's the paradox. The moment of maximum opportunity feels like maximum uncertainty. And most people choose certainty, which means they miss the move. Now let me leave you with this. If silver moves from today's levels to significantly higher prices over the next few years, most people will say, I saw that coming, but they didn't act. Or they'll say, I wish I paid attention, but they didn't understand. And a small group will say nothing, because they were already positioned before it became obvious. And that's the difference. Not intelligence, not access, not luck. Understanding. So here's the question. When you look at silver right now, do you see a quiet market or do you see a setup? Because how you answer that determines everything that comes next. Drop your thoughts in the comments. Not just yes or no. Explain your reasoning, because the real edge is not in the answer. It's in how you think. And if you want to understand markets like this, not just what's moving, but why it's moving, make sure you subscribe. Because most people watch price. Smart investors watch structure. And right now, the structure is changing, and the silver setup is happening right now, before the big move.